Bro, don't get fooled by today's green candle. Nifty closed positive, VIX fell, and the market looked calm. But what happened inside the index today is the exact pattern smart money uses before a trap. If you think today's rise means safety, you might be walking straight into tomorrow's move, the move that smart money is preparing silently. Let me show you what really happened today. Welcome back to WealthMaama, your trusted evening breakdown, where we decode the market honestly, cleanly, and with full explanation, so you don't fall into the trap retail traders fall into every day. Today Nifty opened flat around 25,981, stayed sideways, recovered slowly, and closed with a small gain of plus 47 points at 26,033. On the surface, this looks like a healthy day. A calm market, steady dips, slow buying. But bro, that's exactly the problem. Nifty went up today without the participation of the stocks that actually drive this index. This type of green day is not strength. It's smart money creating a calm environment to prepare their next move. Why Nifty moved today? Globally, markets were mildly positive. Nothing major changed, no big triggers, no major events. Domestically, crude cooled down and IT sentiment improved. But here's the twist. Nifty went up because of only a handful of stocks. IT and insurance carried the index, while heavyweights stayed weak. When Nifty rises while its anchors like Reliance, Maruti, Titan, ICICI Bank stayed under pressure, that's not a bullish day. That's a carefully constructed narrative. A trap. Sector-wise performance. Sector-wise, IT was the clear leader today. Tech Mahindra, TCS, and Infosys all saw strong buying as traders positioned themselves into defensives during a low volatility phase. Life insurance stocks like SBI Life and HDFC Life also performed well, showing a preference for stability over risk. On the weaker side, auto, metals, aviation, and select PSU names showed selling pressure. Indigo fell sharply again, while Reliance, Maruti, Titan, and Hindalco failed to show any bullish presence. This imbalance in sector movement is the biggest clue that today's green candle was not a sign of broad market strength. Top gainers of the day. Tech Mahindra, plus 1.51%. Tech Mahindra rallied strongly as global tech sentiment improved, attracting fresh buying. But it was its strength alone, not market strength. This indicates selective sector-driven upside. HDFC Life, plus 1.49%. HDFC Life gained as traders shifted toward defensives during uncertain phases. Insurance stocks usually rise when smart money avoids risk sectors. This move supports today's trap narrative. TCS, plus 1.48%. TCS surged as part of the IT-led recovery, providing artificial support to Nifty. The move lacked volume but created stability. This was cushioning, not leadership. SBI Life, plus 1.41%. SBI Life showed strong accumulation on stable market sentiment. Insurance inflows increase when volatility stays low, another sign that the rally lacked broad participation. Bharat Electronics Limited, plus 1.25%. Bharat Electronics Limited rose on steady PSU demand and rotational buying. This rise wasn't index-driven but sector-driven. It added only marginal support to Nifty. Top losers. Indigo, minus 2.39%. Indigo continued its decline as aviation sentiment remained weak. High fuel cost pressures weighed on the stock. Its sharp fall despite a green Nifty signals internal market weakness. Reliance, minus 0.88%. Reliance slipping nearly 1% on a green day is the biggest red flag. When Reliance stays weak, the Nifty's positivity becomes fragile. This clearly exposes today's green candle as manipulated strength. Hindalco, minus 0.65%. Hindalco corrected on softer global metal cues. Metal weakness on a green Nifty day shows lack of economic momentum. This indicates buyers avoided cyclical sectors. Maruti, minus 0.64%. Maruti faced continued pressure as auto sentiment cooled. Weak demand signals kept the stock under stress. A falling auto giant during a green session shows selective buying in the market. Titan, minus 0.62%. Titan fell due to weak discretionary spending trends. The stock usually supports the index, but today it didn't. This further strengthens the smart money trap narrative. India VIX, the silent warning. India VIX dropped again to 10.82, a level where the market looks peaceful but becomes extremely vulnerable. A falling VIX alongside a weak internal market structure is smart money's favorite playground. They accumulate, rotate, and prepare silently because low volatility hides their footprints. Bro, when fear disappears, the next move arrives without warning. Support and resistance for tomorrow. The first key support lies at 25,950. If Nifty breaks this, today's trap gets activated, and selling pressure can increase sharply. The deeper support sits at 25,870, which is the level where buyers are expected to defend aggressively. On the upside, 26,100 is the first resistance. A breakout above this may cause a quick short covering burst, but will not confirm strength unless heavy weights join. The real confirmation comes only above 26,180, where bulls may finally regain proper control. Bro, tomorrow is not going to be a casual trading day. Today's slow, steady, low volatility rise is exactly how smart money hides their preparation before a strong move. If Nifty breaks 26,100, it may give a sharp upside burst, but without heavy weights, the rally may fade quickly. If Nifty breaks 25,950, the trap opens up, and the downside could be fast and unexpected. Tomorrow will reveal whether today's strength was real, or just a beautifully designed smart money setup. Bro, don't get convinced by today's green candle. The truth of the market is always hidden in the details, and today's details suggest a silent plan unfolding. If you want this clarity every evening at 5:30 p.m., with no sugarcoating, like, comment, and subscribe to WealthMaama. See you tomorrow, the real move is coming.